Ready, aim, fire. Anybody who trades generally gets to this point early on in their trading. Um, Even if they hadn't had good education, they get to this support or resistance. They get to those words: support, resistance, lines, prices that are going to be support or resistance. So there's all kinds of ways to come up with support resistance, right? Our way, as most of you guys know, one of the ways are PWAPs, position weighted average price. Without getting into what creates the line, if this green dotted line in here is going to be resistance, which means price is going to come up and then sell off and do that, you got to qualify it in case they run right through it and you're stuck. Now, it would be nice to lay an offer at your resistance. You get filled, life is good. That's never going to work. You'll miss a lot of winners and you'll catch all the losers. So that's not going to work. You're going to have to read order flow and continue to read order flow as one of the ways to qualify or disqualify a line in the sand or resistance in this case. So you could see the rotations when we first get up to this PWAP have more shorts than longs. That's the red laser. Then all of a sudden that flips, and it flips mostly because of one big long, okay? But he remains in there, and we get two things that were interesting before this move. Hey, listen, life would be good if it does go right up to resistance and then did that and showed you really quickly that it was going to be resistance. It doesn't always work that way. You often get this, goes up there, travels sideways, and then sells off. What's going to put you in a position to sell it close to when it starts to go down, to sell it to get short, closest to when it's going to go down? First off, you got a buy triangle, which is buy and balance, and price doesn't give an SHIT. It doesn't jump from it. It actually travels through it. Then there was a jump in our chaser with these numbers right here. Let me back it up and show you that. If I just look at those numbers, it stayed above 1,000, which means more aggressive buyers than sellers, 1,000 to 700. Just look at these numbers down in here. Keep an eye on it and watch when they jump. You see them start to jump lower. It went from 1,000 to 600, 400. That's more conducive of the buyers going away and the sellers building up. And you're breaching the buy imbalance, that blue triangle. Breaching meaning get it below it. This gives you a probability that it might be ready to head back down and head back into an area that it came from. An area that it came from first would be this area, and then maybe some previous swing lows that it has in there. All right. That's a ready, aim, fire approach. You see, as it gets below 200 now, it's a little bit more downside action. And I'll speed up as you could see it fly to the downside. But it all started when you seen a change in buyers and sellers. Stop trying to think you're predicting price and start thinking about trying to predict buyers and sellers coming in and out. Yeah, of course, we're trying to predict where price is going to go. But before that, we're trying to predict where buyers and sellers are going to come in and go away. And in this case, they went away on the buy side. And in this case, got below 200. Look at that bottom right number. Got below 200 right there briefly. Stayed low, stayed below 200. And then continued down. A lead in your prediction. It's not going to do you any good to see it go below 200 after it broke 5 ticks, 5 points. That's like telling people it's going to rain after you're wet. Doesn't do you no good. You have to have a lead in your toolbox in order to sharpen your predictive skills. So yes, we're predicting where price is going to go. But in order to do that, we're trying to predict what buyers and sellers are doing close to, especially the last traded price where they're most serious, and aggressive buyers versus aggressive sellers. And we know that with the chaser, which tells a lot more detail than just some aggregate, add up the buyers and add up the sellers and give me those two numbers. That ain't going to do it. You got to see orders moving around and when they get more aggressive. When do you get more aggressive as a buyer? When you take your buy orders and move them up. When you get more aggressive as a seller, when you take your sell limit orders and move them down. That's part of what the chaser is tracking. And so there's no coincidence when you've seen it jump in the chaser and the buyers begin to erode that we begin to go down. And the definition of good location is to have price go your way ASAP. Faster it goes your way, where you could start trading and reading order flow from the green side, the better you're going to be at managing winners, scratching losers, taking small losers. It's hard to take a small loser if the son of a bitch goes 5 ticks against you as soon as you get in, right? But it's easier to take small losers if it goes 3, 4, 5 ticks your way, and now you've got some cushion to play with. That's where I say you could scratch a lot of your losers. So good location is what people miss. It's the skill that they're not trying to sharpen. They don't understand the trigger, the fire, and the ready aim fire approach is always going to be a very important step and the weakest step that most people don't even have, let alone have one that's weak. They don't even have one. They're just playing price and using price to predict price. That ain't going to work. Price goes down and you're bearish. Well, no shit.